Most people think that bankruptcy is the end of their credit journey, but here's the truth. What you do after the bankruptcy is going to matter much more than the bankruptcy itself. Hello, and my name is Calvin Russell. I'm a nationwide credit strategist, and I help people increase their credit scores, lower their car payments, and qualify for homeownership. But today we're going to be talking about how to actually rebuild your credit after a Chapter 7 bankruptcy. Let's get right into it. So step number one, you want to review your credit report first, okay? Before you apply for anything new, you want to make sure that your credit report is reporting accurately. The reason being is because bankruptcy sometimes can have inaccuracies on them. So accounts included in the bankruptcy should not show any active balances, any past due statuses, or any ongoing negative updates. So this is going to include charge-offs, collections, late payments, and they all need to be reviewed for inaccurate reporting. Now, rebuilding your credit is going to be harder when your credit report is still messy with, accounts that shouldn't be there, because new positive accounts may not be enough to overcome old reporting errors. Now, this is why I created my free credit guide called What's Really Holding Your Credit Score Back. This is going to help you understand what might be hurting your credit profile before you start applying for any new credit. Scan the QR code right here on the screen or click the link in the description to download it now. Now, step number two, this is something you want to make sure you're doing, okay? Do not rebuild with random accounts. And here's why. Anytime you have a Chapter 7 bankruptcy, not all credit that comes to you or credit offers in the mail is going to be good credit. So don't open up every secured credit card, every store card, or every credit builder account just because you heard about it or just because they're telling you that you can get approved. And that could be high fee accounts, poorly timed applications, and weak credit products can easily slow down rebuilding your credit. The goal is not just to get approved. The goal is to rebuild your credit profile so that you can start setting your future goals. So let me give you an example. Here's how people accidentally rebuild their credit the wrong way. They get their bankruptcy discharged. They open up a secured credit card. Then they open up a store card. Then they apply for a car loan way too soon. Now they have inquiries, they have low quality accounts, they have new debt, and they have no real strategy. The issue is not that they tried to rebuild their credit. The issue is that they rebuilt their credit without a plan. So step number three is you need to know that your payment history is going to help you out big time. Anytime you have a bankruptcy on your credit report, even if you don't have it on your credit report in general, but you just have it on your credit profile, your new payment history is going to become one of the biggest parts of your credit profile. That means no late payments, no maxed out credit cards, no missed due dates, no unnecessary applications. Your credit report needs to start showing responsible activity. After the bankruptcy, you're not just rebuilding your credit score, you're rebuilding your trust with lenders, especially the ones that you had at the beginning or right before the bankruptcy even happened. Now, if you need a clear plan, you can actually schedule your free credit qualification call. My team, they can look at where you are right now, and then they can walk you through what your goals are, and they can see that if becoming an 850 Club member makes sense to you. As an 850 Club member, you're going to get disputes handled for you, a custom monthly game plan, and community access and accountability. So scan the QR code right here on your screen or click the link in the description below to learn more. Step number four, you need to know exactly what you're rebuilding towards. Listen, do not just rebuild your credit randomly. Rebuild your credit based on the goal that you want to accomplish. If your goal is homeownership, then your plan may look different from someone that's just trying to get a car. On the other hand, if your goal is to try to get credit cards or business funding, your timing, your accounts, and your profile strength is going to matter the most. The goal determines your strategy, and the wrong strategy is going to cost you time. It can also cost you money and approvals as well. Let me give you an example. Let's say, for example, you have two people and they both have a Chapter 7 bankruptcy in the past, all right? Now, they both need two completely different plans. So the first person may actually need disputes first, while another person may need positive accounts first. One person may need to stop applying for accounts, while another person may need to focus on their overall utilization. One person may need to wait before actually making a major move, while another person, they may be ready to take the next step. Everyone's situation is different because everyone's income is different. Their credit profile is different. The banks that they took down and in part of the bankruptcy are different, all right? So listen, bankruptcy may be a part of your credit story, but it doesn't have to be the final chapter of that story. You want to review your credit report. You want to add the right positive accounts. Then you also, of course, want to pay everything on time, and that's how you start to rebuild with a real game plan. So the first thing you need to do, download my free guide, What's Really Holding Your Credit Score Back. You can scan the QR code like I mentioned earlier. And if you need help actually creating a plan specifically based on your situation, schedule a free qualification call today, and I'll see you on the next video.